Will September defy history? Hello everyone, this is Ahmed Saleh and this is the weekly market recap. First of all, I apologize for not being there for the past 6 weeks. I was off in the yearly vacation and I'm back again now. So the key messages for this week is basically the market is resilient and is holding near the all-time high thanks to the expectation that Fed is going to cut rate in the coming weeks. Market is also moving horizontally for a few weeks now, with some stocks breaking out, and we are going to see some of these stocks at the end of the video. And watch out for the news on the CPI next week. If we go to the details, market is holding near all-time high. We can see that we entered into a horizontal range since mid-August, and we are not able to break above the 6,500. 6,500 looks like a very strong resistant, but as long as we are above the 6,360, then we are fine. This is like the 50 days moving average as well. So as long as we are above this support line, then we might have a chance to consolidate and break the all-time high again. Moving on to September itself, September is normally the worst month throughout the year. If we look at the last 10-year average, September average is minus 2.2%. But this is as well not a normal year, because if you look at Feb, March, April, we had negative months here, but the average is always positive. May, June, we have great gains versus also the 10 years median. So it's not a normal year. So let's see what's going to happen in September. Why September is normally down? There are several theories. Some people say because people are coming back from vacation, they are starting the new year, they are focusing now to catch up at work, and they are having the schools and the payment for the schools, so they are liquidating stocks. They are not focusing on the stock market. Some people also say that people are getting rid of the losses because of the tax due date and they want to recognize some losses. And some people say it's a preparation for the strongest quarter, which is normally the last quarter. So the people are positioning themselves in different assets, so they are liquidating and moving to other stocks. So regardless of the reason, the history says it is minus 2.2% on average for the last 10 years. September so far is not bad, and that's basically because there is an expectation that the Fed will cut rate in the next meeting in September 17. And now there is a 100% probability that we cut rate, even there is an 11% that we are going to cut by 50 basis point, not 25 basis point. Moving on to what we expect next week, we have on Thursday's a CPI report. The CPI is expected to be 2.9% versus the previous read of 2.7%. If you look here, we are ranging in the 2.5 to 3% for quite some time now. So 2.9 is the expectation. We need to see a 2.9 or lower than 2.9 in order for the market to continue to go up and break the all-time high. Also, we need to look at the core CPI. The core CPI need to be below 3 so that we can continue to go up. My trading strategies for the next period is to trade the stocks that are breaking of the 52 weeks high or at all-time high, and also the stocks that are rebounding from key support level. Let's have a look at few of these stocks. So the first one here is Seagate. Seagate is doing great. So there is a nice story here. If you see here, this is a resistant line at 152.2, and this line was broken about end of July. I got in here, but it was a fake breakout, so I got out again, and then it formed a new high and it tried to break the new high. I entered again when it was broke, and this is giving us the learning that you can try a number of times to get into the stock, and you will be stopped out. So it's as long as you can see an entry, you take the entry. You don't know if it's going to be a fake breakout or not. You just go in, and then if it's a fake one, you go out. If it's not a fake one, you will continue. As you can see here, now the stock is continue from almost like 154 to 188, a very nice gain in Seagate. Next one is GDX. Again, a good learning here. The stock was having a resistance at about 54.5, and I got in after the break of this resistance early August, and then I got stopped out. But the stock formed a new resistance, and then it broke the resistance. I got in again, and then it continued upward. So again, the learning is, it doesn't mean that if you are stopped out that you forget about the stock. Whenever you see an entry point, then you go in again. Another good one is the DHI. DHI, the same story. I got in at above the 154 here when it was the 154 was broken, and then I got stopped out, and then I got in again, and we'll see where is this going to lead us. KGC, same story, but this one is going very nicely. Got in after the 16, like in July, and then continuing to go up till the 22. So that's 6/16. Very nice gain. Gold, of course, is now breaking out again. We had talked about the strong resistance of 317 in GLD. So you can see here it's 1, 2, 3, 4, 5, 6, and when it is broken, you get in directly, and then you see where is this going to lead us. So this is the first strategy, which is like the breakout strategy of the 52 weeks high or all-time high. Now let's look at the second strategy, which is buying at support. You look at CrowdStrike, for example. CrowdStrike had a good result on that day. It was going down, 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 and then it had a good result at that day. The stock broke out, but then lost all the gains. But look what is happening here. There is a consolidation that's happening here above the 400. So you can see there is a support at 402. Call it 400 as a round number. So, and look at this 200 days moving line is acting like a support for this stock. So there is several support points here, and the stock is rebounding for 1, 2, 3, 4 days now. So this is a good entry if you get in like at this level. So about like 417, 416, then you have like versus the 400, it's about 4% downside, but you have about 10% upside to the next resistance, which is at 450. So this is giving you almost like 2-to-1 risk reward ratio. Grail as well, if you can see here, it is respecting as well the 200 days moving average. This is 1, 2, 3, and also it is breaking out from this base that it has formed during August. So you can get in and you can see where this is going to lead you. The risk here is very low, while the upside is almost about 30%. A great reward risk ratio. Next one is Sound. This one is very much respecting the 200 days moving average and also the 50 days moving average. When you see something like this, the 20 and the 50 and the 200 are moving together, very close together, this is something good. It means that this is a great support here. The stock is always finding a support, and you can see it very clearly here. So you can buy near this support, and then your exit will be if you broke this support down. That's it for this week. Thank you very much. If you have any question, please type it in the comment or email it to the info@thepersonalfinanceacademy.com. And if you like the video, please press like, share it with your friends, subscribe to the channel, and have a nice weekend, everyone. Thank you.